Let's take a look at a trending ticker here this morning, and that is Home Depot, the company issuing a conservative same-store sales forecast for the year as it expects consumers could potentially hold off on some of those larger purchases. But the focus on the street, the reason why we're seeing the stock up nearly 3% here in early trading, much of that has to do with the stronger than expected quarter, the fact that same-store sales did snap 8 consecutive quarters of declines, actually rising 0.8% from a year ago. Joining us now to discuss is Michael Baker. He's D.A. Davidson's senior research analyst. Michael, it looks like the street, at least looking at the more optimistic side of this report. I think the big question is whether or not some of the improvement that we saw in same-store sales, whether or not there's enough momentum for that to continue. What do you think?
Yeah, I think the strength in the fourth quarter is really what is carrying the day here. The 2025 outlook was below consensus, particularly on the earnings side, a little bit more so than on the sales side. Both were below, but I think the real pressure point was the earnings. But it's pretty clear, I think, from the call and from what we know about retailers in general, that companies want to sort of set a lower bar. That doesn't mean they're sandbagging it. January was a softer month than December, so they did see a little bit of a slowdown. That plays into the guidance. But I think the bigger idea is let's just set a low bar, something that we're comfortable with, given all the uncertainty in the environment, all the policy rifts, as we call them, our acronym, for rates, inflation, FX, and tariffs. It makes sense to set a low bar. But clearly the business seems to have bottomed, given what we saw in the fourth quarter in a number of metrics the company talked about on the call. Big ticket spending, et cetera.
Well, it's interesting, though, because the CFO did mention that they're still facing pressure as customers adjust to high interest rates. How concerned are you about the headwind that could present, especially if the Fed does not continue to cut rates?
Sure, that's a pressure point, but it's a pressure point that's not getting any worse, right? We've been dealing with that for quite some time. In fact, rates don't seem to be going up anymore. They're down 30 basis points or so on the 10-year in the last month. Home Depot gives a metric on comp sales for tickets $1,000 or higher. That was positive this quarter. That's the first time that's been positive for more than 2 years. It had been down 5-6% every quarter. So there's still some pressure on these interest rate sensitive businesses, but again, no worse so than it has been, and maybe even getting a little bit less worse.
Michael, one of the questions going into this report was the impact of tariffs and the threat of tariffs, maybe what that could do ultimately to Home Depot's business in the longer term. Where do you stand on that, just the broader implications of it?
Yeah, to me, tariffs are a relative game, right? It's all a function on how much of your COGS come from overseas, and then your ability to push back on vendors or pass through to consumers. And we think within that sort of dynamic, Home Depot is pretty well positioned, particularly as it relates to pushing back on vendors. That's all about scale. Home Depot pushes a big pencil. Their vendors want to keep that Home Depot business. That doesn't mean the vendors will eat it all and Home Depot won't absorb any. But within that sort of negotiation dynamic, Home Depot is pretty well positioned in our mind.
So it doesn't sound like it's too big of a concern, but I guess how big of an impact is it going to have on their business?
Well, again, if anything, we think it'll tend to be maybe slightly positive, because we do think they'll be able to pass some of it through to consumers. That's what we saw last time there were tariffs in 2018-19. So maybe even a little bit of a comp benefit. Now, the offset could be, do you lose units? But that's not really what we saw last time. So listen, we don't want to dismiss it. We do think it could have some impact, but they will be, particularly on the margin side, but they will be impacted less than others. And again, it could actually be a helpful item to the comp line.
One of the concerns from a macro level is this idea of a K-shaped recovery, and that lower income consumers will potentially be more negatively impacted by the policy shifts of things like tariffs versus higher income consumers that have a little bit more on their balance sheet to protect them from any inflationary pressures. How does a company like Home Depot potentially get impacted by a K-shaped recovery if we do start to see those middle and lower income consumers struggling even more?
Yeah, Home Depot does skew more towards higher household income customers, just by virtue of the fact that you're a homeowner. So that kind of dynamic, while unfortunate for the lower end customers, it really does play well for Home Depot, which again, more of their customers are in that middle to higher income demographic.
Michael, who's best positioned within this coverage space right now to you here over the next couple of quarters?
Well, we like Walmart, particularly on the pullback after last week's report. We like other discounters like BJ's and Costco, but BJ's better just given the lower valuation. When I say other discounters, we don't love the dollar stores, but BJ's and Walmart within the discount space. And then I think there's an opportunity here in Home Depot. We upgraded it last year. We knew we'd be a little bit early as it relates to the housing recovery, but housing's not getting worse here. In fact, existing home sales have been up on a year-over-year basis 4 months in a row. So again, we think we're in front of the recovery, but that's really when you want to buy stocks in front of the recovery. So we think we're there now.
All right, Michael, always great to talk to you. Thanks so much for hopping on with us here today.